There are 63 banks that are on the verge of a collapse, and that has many people extremely worried. But I want to be very clear on something. Right now, you turn on social media, you turn on mainstream media, you flip on the news and you see all these good reports that the economy is strong, the dollar is strong, Bitcoin's going up, the stock market again going up. Everything looks great. But here's the truth. The truth is that banks are in trouble. Many banks are in trouble. Look at this. It says U.S. banks on the brink of collapse. $517 billion losses threaten 63 banks. This is just the start. But I want to explain what's going on here and how two banks that are reported just the other day are now very close to a collapse because of commercial real estate. So I'll break all this down in just a moment, but all I ask is one thing. It takes 2 seconds. Go ahead, hit that like button if you enjoy these daily updates. And now let's begin. So in just a moment, I'm going to talk about a couple specific banks that are on the verge of collapse. But before I do that, I want to be very clear on something. Right now, we do not have enough available to us. The government does not have enough money to bail out all these banks. But you know who does? The banks. The banks could do something called a bail-in. A bail-in is where the bank uses the money from depositors and unsecured creditors in order to help them survive and avoid a collapse. So get ready, because banks could be coming after your money to help them stay solvent. So again, that is a problem. But look at this. I want to show you this one right here. It says these banks are overexposed to CRE. CRE is commercial real estate. It says there are 67 banks with commercial real estate exposures greater than 300% of their total equity. The two banks we're going to talk about today are Flagster Bank and Zion Bank Corporation. It says are chief among the 67 banks in the U.S. that are at increased risk of failure due to their commercial real estate exposures. It says Flagstar Bank reported $113 billion in assets with a total commercial real estate of $51 billion. Not bad, right? However, it says the bank only had $9.3 billion in total equity, making the commercial real estate exposure 553% of its total equity. Wow. It says Zion Bank Corp had total commercial real estate of 440% of its total equity. The bank reported $87 billion in assets and total commercial real estate of $26 billion, but only had $5.8 billion in total equity. That's a problem. These banks are heavily exposed to commercial real estate. And within the next year, by the second quarter of 2025, we're going to have, $1.4 trillion in commercial real estate has to be refinanced. There's no way businesses are going to do it unless we see interest rates completely plummet, which they're not expected to. That's a problem. But what we're facing today is, again, many banks are on the verge of a collapse. There are many banks all across the United States, and I just got done talking to a friend of mine just this morning, and he was saying that his bank's closing down. They're not staying open because of one thing. Banks are now closing certain branches in areas that have very few deposits. If the bank is just there so people can go in and cash a check, that's it, the bank is closing. They don't want to be there. So in very affluent communities, banks will stay there. But in harder hit areas, banks are going to close. And I know for most people, they're probably thinking, well, if the bank closes, that's fine, right? I don't need the bank. But in many cases, you do. What if you need to go get a loan? What if you need to go get an auto loan, a mortgage, a personal loan, a student loan for a child? What if you just need a place to go and make a wire transfer, right? You need a place to put your money. What do you do there? That's part of the problem. The banks are necessary. I want to read you something else. This is from the FAU right here. Okay, and this is Florida Atlantic University. But look at this. It says data analysis. More banks at risk of failure as commercial real estate loans reprice. Look at this. This is just from 2 days ago. It says more than 60 of the largest banks in the country are at increased risk of failure due to their commercial real estate exposure. It says 67 banks have exposure to commercial real estate greater than 300% of their total equity. It says this is a very serious development for our banking system as commercial real estate loans are repricing in a high interest rate environment. It says the U.S. Bank's exposure to risk of real estate from a real estate screener, a part of the banking initiative at Florida Atlantic University, measures the risk to exposure from commercial real estate at the 157 largest banks in the country with more than $10 billion in total assets, using publicly available data released quarterly from the Federal Financial Institute Examination Council Central Data Repository. Cole calculates each bank's total commercial real estate exposure as a percentage of the bank's total equity. Bank regulators view any ratio over 300% as excess exposure. Well, we already talked about Flagstar Bank and Zion Bancorp. Now, here's one thing I want to read you. It says, for comparison, the Q1 2024 industry average benchmark for total commercial real estate exposure was 139% of total equity. That's a problem when there are banks that have 200, 300, 600% exposure to commercial real estate. Okay? But the big issue here is the Federal Reserve. We know FDIC does not have the capital to insure all these different loans or all these different deposits. They just don't have the capital. They can't do it. FDIC does not have that much money. We have FDIC insurance would cover less than 1% of all total deposits in the United States. That's how serious this is. This is also why banks are now discussing not a bailout from the federal government, but a bail-in from their depositors and unsecured creditors. That's who they're considering taking money from, which means your money would not be there. Your money would still be, in the bank, right? Technically at the bank, but all they're going to do is give you an IOU. Say, here you go. This is how much we owe you, right? And don't worry, we're also going to pay you interest, which is going to be less than 1%. It's going to be a minimal amount. This is the problem. When you go into the bank because you want to go and buy, say, a car, you want to go pay for, some medical bill. You need to pay for dentures or for college tuition, and the bank tells you, sorry, I know you have $50,000 that you set aside for your child for their college tuition, but we can't actually give you all of that today. But what we can do is we can give you $10,000. Come back in a month, we'll give you another $10,000. You just got to keep making the payments to the school. You'll be fine. Just wait till that happens. Wait till the bank tells you, sorry, you can't do that. I've experienced this recently. And I told you about this where I went into a bank. And the reason I only did this is because people were talking about it, here in the community and on social media as well. But I went to a bank of mine, got out a cashier's check. I took out this cashier's check and I took it to another bank. Okay. And the check was like $30,000 or $40,000. And I took it to another bank, which I also have an account with. And I said, I want to just deposit this. Okay. They told me, well, it's a little higher than what they're used to. So they just need to kind of place a hold on it for 72 hours. So I just can't use the money for 72 hours. Is that okay? I told them, well, no, I kind of need it. And so they gave me $5,000. Not in cash. They gave me $5,000 available immediately. The other $35,000 would be available in 72 hours. Okay. And I didn't really care right? It wasn't a big deal. I just moved money from one account to another, and the reason I did it again was to test to see if that was the case, where banks were not giving people the available money. The money wasn't available. They were pretty much blocking you from using your cashier's check funds. And so again, I just confirmed this, and I told you guys about it like a week or two ago. Well, here's what you need to understand. Banks are in trouble. And as more people lose their jobs and can't afford to pay their mortgage and their car payments and their credit card loans, guess what? There's going to be more pressure on banks. So this is why I bring this to your attention. Do what you can now to protect yourself. Put some money aside in another bank, in a credit union, in a regional bank, in a large bank. Use an online bank, right? Spread your money out so that you are diversified just in case a bank decides to close or a massive bank decides they need to do a bail-in, where now they're using your money to keep them afloat. So I will leave you with that, but just understand right now there's a lot of speculation that we could see potentially 50 to about 200 banks close by the end of this year. That means in the next 6 months, we could see anywhere between 50 and 200 banks close. Just think about that for a second. So again, I will leave you with that, but just understand as of today, that is all we know. So again, thank you guys for watching. Consider subscribing, and I'll see you guys on the next one.